Hello traders, hello everyone, and welcome to our new video update. It's Friday. It was quite an interesting week. As you know, we have seen new turn to the upside on stocks. At the same time, we have seen a sell-off of the US dollar, while Aussie and other commodity currencies are trying to stabilize. We are seeing some very encouraging price action for risk on going forward. So I really want to take you through some of my wave counts here. So firstly, I want to look at the euro dollar. As you know, this one was under the spotlight this week because of the ECB decision. They actually raised the rates more than expected by 50%, by 50 basis point. But actually in the last 2 weeks or so, there were speculations actually that they will hike more than expected. So still euro dollar did not see any significant break to the upside, but I still think that we can see more upside here. Especially because I think that US dollar index in general has seen some very important reversal, which could drive us even lower. So I think that euro dollar could stay trading above parity or potentially even higher from here, from current near-term levels. But in this risk-on environment, if stocks will continue to hold a bit, I think that commodity currencies should be much more attractive. So euro dollar, I have been sharing this chart. Just a second. Okay, euro dollar. I've been sharing this chart a few weeks back. I said that looking from multi-year perspective, well, euro dollar, no matter what we think, the euro dollar based on the price is coming into some very interesting longer term levels. So of course, euro inflation in the eurozone is much harder to handle when you have very weak currency, especially if you're a net importer. So what we are seeing here is inflation obviously picking up. The euro dollar is coming to the downside. So if at some point we will see a change in this cycle and the euro will strengthen, then of course inflation could come to the downside, and I think that this could actually happen in the upcoming year. So I would not be surprised if euro dollar will show us a price stabilization here around parity, or potentially even drop towards 0.9 level, which was the latest ECB intervention level back in 2000. Okay, so looking at the short-term perspective, well, we are having these 5 waves down from 2021 highs, and we came into some very nice FIP potential support levels. I've been watching this for a while around parity, and we are seeing the response quite nicely to the upside from here. So what's the most important for me at this stage is that we have here this lag from the lows, only one leg of a minimum 3-wave recovery. Because if I think that euro dollar will stay bearish, meaning it will see more weakness, well, this rally should then be corrective. But corrections, okay, if you look at the subdivisions of these rallies, should be made by 3 waves. So if you look closely here, well, that's still only first leg up. You are now probably in wave B consolidation, maybe even wave 2, meaning that in either case we have to see more upside here for third leg before we either turn back to the downside from resistance or even potentially extend higher. What's the most important level to watch is 103.60. Why this one? Well, because 103.60, let's say that I'm very bearish and I say that this is wave 1, wave 2, you now have seen low for wave 3, and you're now in a wave 4. Well, wave 4 should not overlap or step into territory for wave 1. So if that would happen, this would even increase the odds that bottom, at least temporary one, is really building in here. Okay, so watch out for potential more upside in the short term, but if we see 103.60 broken, confirmed by the daily or even better weekly close at some point, then of course I would be looking for much higher prices. So in the short term, I think that this low could remain in place here. Now let's take a look also on Aussie. Now on Aussie dollar, firstly, let me look at this short-term chart. Well, Aussie dollar has seen quite nice and deep retracement, like each other currency except US dollar, obviously. So what we were seeing here or tracking over the last few weeks was this wedge pattern. So even if you try to ignore the wave counts and just focus on basic technical analysis, this wedge pattern still should be quite interesting. Why? Because normally they will occur at the end of the higher degree trends, and they will try to confuse the traders because markets will be moving to the downside, but choppy and overlapping structures will not allow for any significant moves. So what usually happens here after an ending diagonal, well, you will see at some point again that volume and momentum will pick up, but usually this will happen in the opposite direction. Okay, so the most important is to keep an eye on a wave 4 level, swing high, and this trend line resistance. Whenever these two are broken, especially if this happens with a 5-wave rally rather than a 3-wave bounce, well, this should be an important evidence that bottom is in. So I think that there is room for much more upside here on the Aussie. Also, next week we have the CPI. As you know, Bank of Australia, they mentioned actually that they will track the next, to keep an eye on the next CPI figures, and according to the numbers that will come out, obviously they will potentially maybe hike the rates if CPI will be higher. So keep an eye on this on Wednesday, because I think that could be a really nice indication where the Aussie dollar could go from here. On the other hand, we also obviously have this FOMC meeting once again. They are expecting to hike, but we'll see if what will actually on the press, what will say, if inflation will somehow, if they will be optimistic about inflation to come down. Obviously that could mean that there will be less hikes, and this in my opinion could be very bearish for the US dollar. On the Australian dollar on the other hand could see much more upside, because at the same time we would also see higher stocks. Now, since I talked about ending diagonals, if you are new to our website, keep in mind that we still have this, it lasts till Monday. You have this summer sale yearly package with a 50% discount, and also you will get the free Elliott Wave school educational videos where I will talk a lot about these ending diagonals and potential trade setups, etc. So since I mentioned Aussie, also keep an eye on this overlay chart. So here I have the overlay chart, which actually shows the correlation between S&P 500 and major dollar currency pairs. And what you can see that Aussie is actually the strongest since July low. So since the US dollar index turned to the downside, it hit resistance. We have seen a rally on Aussie, Euro, Cable, Loonie, and others. And since then, the Aussie is the strongest. So whenever I want to look at some, not always, but usually that's the best approach, at least for me. Whenever I want to look at some of the potential trade setups, I want to look into the currency that is the strongest, and definitely that's Aussie. So with this in mind, with potential CPI that could be coming again high, and maybe everybody, Bank of Australia will remain hawkish, I think that Aussie here has a very good upside potential. And also, I want to look in the big picture here. We'll take this a second, not be too long here. So what I'm looking at the big picture, well, notice that we have these 5 waves down that was from, I believe, 2011 highs. And then you have seen this spike to the downside, COVID low, and then a very strong reversal, broken trend line. So that's only first leg of recovery. Now you're in second leg. You can see that currently this one appears to be much slower compared to the previous sharp rise. So usually that's evidence that this is correction, just a pause, and the next impulse should be to the upside. Also keep an eye on the Hang Seng Index. This also still it's a multi-year trendline support, so if this one will hold the support and maybe even rally away from it, I think that this overall will be positive for Aussie, not to mention potential head and shoulders bottom formation here. Okay, now also in the short term, what is maybe important for the Aussie, at least in the short term, for potential long setups, I will observe potential pullbacks here. I hope we get one a little bit deeper here. So the next important market to track is obviously also gold. Okay, so gold, what happened recently? Well, we have seen quite a deep pullback, and I made a video 2 weeks back or so, when gold has been trading around still 100, maybe not 100, but $80 higher or so. And what I noticed is that large speculators, okay, were short, but still not that heavily short. As you know, markets always have to move into some extreme levels, especially based on sentiment, before maybe change in cycle can happen. So if you look here at the COT data, okay, this obviously still not updated. It should be this weekend. This weekend you can actually see that large speculators, which are in green, are not yet at the levels compared back to this 2018 and 2015 2016 area. Okay, so I think that there is still a chance that we'll see this drop and then a reversal, higher. We will see what the data will show us this week. I think that obviously from longer term perspective, we are definitely moving into some very attractive zone here. So looking at the wave count, well, you have potential flat formation here with the 5 waves down in the recent drop that can make a wave C. So we came very close to this wave A support. So to give you just a quick update what the flat is, it's a 3-3-5 pattern. So you have 5 waves down for wave C. Before that you have 3 wave rally for wave B and 3 wave down for wave A, and that's the most important characteristic. The first drop, the first leg was made in 3 waves, and whenever that happens, it means that the whole price action is corrective. The only question is if it's part of a correction, meaning more longer pause in time, or it's already the whole finished correction and you will be seeing a move back to new all-time high. So I think that this is quite attractive, quite interesting price action on gold. Even if you are bearish gold and you think that this is the major top and we go much lower, well, I still think that these 5 waves down should see at some point a 3 wave retracement minimum. Okay, now let's take a look also on the Euro Aussie. Now, I've been sharing analysis on Euro Aussie lately. I also posted this on TradingView and on Twitter, I believe, as well. So make sure to follow us there. And what is happening on Euro Aussie? Well, I've been saying that no matter what ECB does, Euro Aussie is still in a downtrend. Okay, even if they will have more than expected, which has happened, still Euro Aussie turned back to the downside. If they would do only 25 basis point by the ECB, well, this pair would also see much sharper sell-off. So what we are tracking here, well, notice that the recently Euro Aussie came down here with impulsive price action, breaking this channel, the major flag pattern, which suggests more weakness. And why? I think that this weakness should remain in the cards because the rise previously has definitely these corrective characteristics. It was not a 5 wave rally from low. So I think that these levels, whenever the correction is finished, obviously can be revisited. So watch out for this retest of these lows down here. So this makes quite attractive overall view for the Aussie, for the bulls, especially in risk on environment. You will see Euro Aussie moving to the downside. So definitely keep an eye on stock market as well. Now let's take a look also on dollar yen. Now dollar yen obviously has seen a massive move to the upside over the last few months, obviously because of the US dollar, because of the hawkish Fed. So still also on the other hand we have Bank of Japan, who is fine with the current policy. They mentioned however that they are observing this currency rates. Obviously Japanese yen is very weak, but still I think that at some point we will see a major reversal here, and I've been tracking this one for a while. What I see firstly here on these higher degree time frame charts, it's a daily chart. Well, I see that I can count 5 waves up here within this extended lag. Let me change the background here. So you can actually see very nice 5 waves up here, potentially wave 3, and after wave 3 you should expect wave 4. And normally the end of this such a very explosive move, not normally but in some cases, you will see that they will end with a specific pattern, again with a potential wedge, because market has moved so far that it does not have any power anymore to make much more extended lags. Okay, so that's why you can see actually a much slower price action forming a wedge pattern, and then when momentum picks up, you will see a move into the opposite direction, very sharp one. And if you look closely now on the 4 hour, you can actually see that this recent push to a new high, well, it was a wedge pattern. And what we are seeing right now is a potential breakdown. Why? Because we are breaking this trendline support. Keep in mind, it's also Friday, and if we will see prices staying below this trend line, if we'll close below 137, then I think that more weakness could be seen. Of course, the next very important bearish confirmation level would be 134.77. Also, before that, notice what happened here. Well, in ending diagonal, sometimes the price will move out of the wedge pattern. Okay, in such case, you should keep an eye on the distance traveled within a wave 5, especially if wave 3 is short, like this one. Well, it should not be shorter than a fifth wave, right? So this did not happen, meaning the price remained below 140.20. So obviously, this means that the bearish view, still a potential ending diagonal, was valid. Also, we had RSI divergence here, which is also very common whenever we have this wedge. So I think this current breakdown point is quite interesting, quite attractive, and could see more downside. Also, we tracked with members yesterday very closely when the ECB made their decisions, and later for the US session, this price action. Notice that there was a very nice clear 5 waves down, followed by a 3-wave rally. So that was the rally during the Bank of Japan press conference, I believe. And when market broke this their open price here, 138, well, market has seen immediately break to the downside. At the same time, obviously, this weakness on dollar yen has been confirmed by the break higher here on the 10-year US note. So I think that if the US yields will continue to trade to the downside with the US dollar index in general, I think the dollar yen could see more weakness here as well. At the same time, obviously, I think that yen crosses could see some resistance. So whenever you see dollar yen moving to the downside, maybe it's better to keep an eye maybe on Aussie dollar bulls rather than Aussie yen bulls. Okay. Now, also, let's take a look on the final market sector, which will be cryptocurrencies. So if you were tracking our analysis lately, I think I also shared it here on Trading Views somewhere. I've been talking about this retracement from all-time highs on Bitcoin, which was similar, not sure where this, but anyway, which is similar in distance and time compared to the correction that we have seen back in 2019 through 2020. So what we are seeing now, well, very nice response here, very nice reversal to the upside. And I find this very interesting, especially because this is coming obviously at the same time when US dollar is turning lower. So if we are expecting more weakness on the US dollar index, at least in the short term, okay, then obviously these cryptocurrencies could stay supported as well. So I think I have it here somewhere. Notice that actually, yes, here is, let me just change this. Okay. Okay, so actually what you can see here you have at the top Bitcoin, here you have dollar, and notice that this reversal actually occurred at the same time zone. Okay, so we have seen a very nice reversal here to the upside on Bitcoin while US dollar index turned to the downside. And what we are expecting on the euro, as I said earlier, at least 3 waves to the upside. So at the same time, I will be expecting 3 waves drop minimum, but could be more, to the downside on US dollar index. So if that would be the case, then Bitcoin, I believe, should see more upside. Also, we have been tracking this Bitcoin with stock markets as well. What I like is the technology sector. You can see Nasdaq here in 100 in black is again trading very nicely to the upside. So Bitcoin is trying to catch this move. So at the same time, make sure to keep an eye on AMD stock and Intel stocks, I think that this one has a very strong correlation with Bitcoins, and it will see more upside there. I think that cryptocurrencies will have support to stay in place. Also, what I like is that actually Bitcoin has, or cryptos in general, has seen some weakness. I think on Tuesday or Wednesday, after Tesla announced that they sold 70% of their Bitcoin holdings or so, but still market was managed to find the support. So I think that this is quite important because we know in which direction sentiment is. So if we'll see more upside on stocks, technology sector in particular, I think that that cryptos could also see more upside. Of course, I'm talking more from a longer term perspective rather than short term, because short term you can always retest the lows, but overall it would not change my view. I still think that the bitcoins or crypto, sorry, can be much higher towards the end of the year. Also, keep an eye on altcoins. We've been recently tracking Ethereum quite closely here. So as you can see from a few days back, we've been looking for higher prices on Ethereum, and so far this is playing out very nicely. And what I think is very important to track here is also this market cap Ethereum dominance. You can see here that market is actually reversing to the upside after this only 3-wave drop. So I think that this one has more upside potential, but that doesn't mean that Bitcoin will not rise or any other cryptocurrency. It just means that Ethereum maybe has more upside potential, at least in the near term, and so far this is proving to be the case. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video. So again, if you're new to our YouTube channel, to our website, make sure to check our offers. We also have a trial available to new clients. Have a good weekend. Bye.